Good morning out there, guys and gals. Welcome back. Welcome back. You know what time of day it is. 7:30 a.m. Eastern Time, Monday through Friday. Welcome back to our crude oil morning prep, a very unique way to get your day started each morning here. My name is Joseph James. I'm from SchoolOfTrade.com. Come out and see me any day of the week, Monday through Friday, 8 a.m. Eastern Time in our live trade room. I've got my partner in crime, a colleague, a good friend, and a graduate of School of Trade right along with me here today. His name is Marty Errico. He's from Traders Audio. And boy, him and his partner Jeffrey do a great job every morning at 8:50 a.m. Monday through Friday with a live broadcast directly from the NYMEX exchange. We're going from the screen here in Los Angeles all the way to the trading floor on the NYMEX this morning with our crude oil morning prep. Once again, good morning out there. My name is Joseph James. I'm a technical analyst. Yeah, that's right. I'm a lonely old chartist sitting in my home office. This morning, I'll be providing you with a top-down approach, meaning I'm starting with a slower time frame, working my way down to a faster time frame. I'm going to try analyzing what happened overnight, specifically what happened coming out of London. This is going to give us a big clue today. What's happening out of London? My job this morning is quite simple. Anticipate direction at the open. If I can anticipate just a little bit, then I can use support and resistance along with that direction to look for high percentage trading opportunities today. I'm looking to get started today as early as 8 a.m. Eastern Time. But remember, we don't want to go forcing anything, especially in these summertime months. So we'll be waiting patiently here to see what happens after 8 o'clock to see where our first few trading opportunities of the day will come. Moving forward, once I'm done with you, I'm always curious to see what my good friend Marty Errico has to say. He's our resident pit analyst this morning, and he'll be providing us with our analysis of market direction, intermarket divergence, looking at crude oil, RBOB gasoline, heating oil, and Brent crude, checking out the market internals, important options prices, lots of clues in the strike prices, and of course we've got those always important, oftentimes a little bit confusing, right? A little bit elusive, those pit session trading levels. So stick around here for the bottom half of the call because we got Marty Errico going to give us a glimpse into what they're seeing on the trading floor this morning. This is priceless information in my humble opinion. All right. Now that you know what the plan is this morning, let's jump right into it. As we do every morning, we want to set the stage. What day of the week? What week of the month? What month of the year? As always, head on over to the Crude Oil Squawk blog. You can find that link on sidewaysmarkets.com. Go to Sideways Markets. You'll see the Crude Oil Squawk and Prep link right there. And, of course, that will take you over to our Crude Oil Prep blog. This blog has all of our previous recordings. It's also got all of our notes each day. So feel free to go out and grab a copy of this today, and you can follow along with me at home. Moving forward now, we open up the news worksheet this morning. And again, like we do every morning, we ask ourselves, what day of the week? What week of the month? What month of the year? Today's a Wednesday. It's a Wednesday in the month of August. Right? What is it? The second week of the month? And we know that August is a summertime month. So let's think about what the situation is today. Right? Think about it. Today is Wednesday, August 7th. Let's think about what the personality characteristics, let's think about we might be able to skin this cat before it even starts today. Let's see if we can figure it out. First of all, Wednesday. Inventory days, right? We typically see inventories on Wednesdays. When don't we see inventories on Wednesdays? When there's a holiday on Monday, right? If there's a missed day earlier in the week, it'll get pushed back to Thursday. But hey, today's Wednesday, inventory day. What do we know about an inventory day? We know that it's going to be a little bit sloppy to get started. We know that sometimes crude oil can be almost impossible to trade before 10:30. And then after 10:30, we make some great profit. We know that Wednesdays are a variable. We know that we've got to be suspicious of the price action before we get started. Remember, today is that day when everybody's focused on one news report, right? One news report. It's very important we understand outside of nat gas tomorrow, this is the only news event that we get that everybody is paying attention to one market, right? Think about it. Jobless claims applies to everything. International trade applies to everything. Non-farm payrolls applies to everything. GDP, the list goes on. Guys, all the news events apply to everything except for this, crude oil inventories today. Let's keep going. Second week of the month. Anything important in the second week of the month? Not really. First week, I would say, brand new month. Last week, I would say, end of the month, right? Third week of the month is OPEX. Nothing to worry about second week of the month. All right, move forward. How about the month of August? Is there anything that we should talk about, anything we could think about possibly? Does August give us a clue? Does August give us a heads up on anything? Absolutely. I can smell the barbecue grill, the sunblock, right? I can see the surfboards on the ocean already, right? We know it's summertime. And summertime always leads to inconsistencies in price action. No, the summertime does not mean we have to sit on our hands the whole day. The summertime does not mean we can't make profit. The summertime does mean, though, that there will be times of lower volume, right? There will be times where you will notice it feels like the market has fallen asleep. And that's just simply because there are about half, maybe even less, of the traders are participating, right? We're listening to Marty here in a few moments, and Marty is going to tell us about what it feels on the floor today. And he will probably confirm for us that for a summertime day, it's not that bad, but overall, it's probably, relatively speaking, quiet on the trading floor in the month of August, right? Historically, a large number of Europeans, the majority of the traders will be going on vacation from time to time in the month of August. So we know the month of August is a summertime month, and we know to expect those little inconsistencies in price action, right? Fast price action, slow price action. But the good thing is just like the old saying, right? Trades are like buses. If you miss one, just wait a few moments, and there'll be one coming right around the corner. Don't worry about missing a trade. Just worry about forcing those trades, because we want to be sure that we have that market personality that we're looking for today. It's a Wednesday of August, right? Summertime Wednesday. We now know to expect some inconsistent price action because of summertime month. We now know to be ready for 10:30 a.m. news today. That's the biggest news of our day, and it's a great news event for crude oil traders. My rule of thumb, guys, when you're trading that 10:30 crude oil inventories, is I'm sitting on hands from 10:15 a.m. until 10:40 a.m. Eastern Time, making sure that I'm not trading too close before or after that news event. Before the news comes out, price tends to consolidate. After the news comes out, price tends to fake out, break out a little bit. It tends to go in one direction and then, bam, snap back in the other direction, right? Almost as if to suggest the initial reading of the news was incorrect, right? And the smart money was waiting for you to put your trades on just so they could take your money away. So just remember to keep it simple after that news comes out. 10:40 a.m., that's when I'm looking to get into my first few trades after the news event this morning. All righty. You've seen enough of this already. Let's jump into some charts now. First thing I'm looking at is an anchor chart. Don't cheat, don't cheat. Don't go down too fast. First things first, grab an anchor chart. We've looked at this same anchor chart all week this week, right? We've been looking at this for the last 2 weeks. As you can see here, big move up has led to a big collapse back down. A, B, C, D. We're almost looking at some symmetry down here. I didn't mark it up, though, because 103.99 is pretty much where we're looking here. You look at some symmetry. You'll see here we're pretty much right on top of that 104. So we got some easy support levels to work with here today. What am I seeing on the anchor chart? Well, first of all, Joe, what's the goal of the anchor chart? The goal of the anchor chart is to find direction. That's the first goal. And to find support and resistance. So let's take a look at the first thing, direction. What type of market direction are we seeing right now? I'm seeing, ooh, baby, sideways, right? Sideways. Double tops, double bottoms, right? Sideways direction. What about major support and major resistance? Where am I seeing major support? Major support, 104.86, 104.10, 103.99. Major resistance, what's that say right there? 105.83, we'll say 105.82, 105.80. Trend line, 107.17, 107.27. All right, guys. Easy, easy to find the clues we need on this anchor chart. What are they again? Anchor chart tells me range or trend is sideways. Yeah, the long-term trend appears to be down, but short-term trend right now, definitely sideways. How do we trade a sideways range? Avoid the middles, buy the lows, sell the highs, look for fake out breakouts, wave long above the highs, wave short below the highs, right? We know how to trade a sideways range. First clue's in the books. Second clue, support, support, support. Why do I care about where these major support and resistance levels are? Well, follow me back here. Look what happened on Monday. See what happened on Monday? We called this support at 105.75 before we got there, folks. Price bounces off the 105.75 and starts to go higher. As you can see, most of the best moves we see occur around these major support and major resistance levels. So now that we know where major support, major resistance are, now we can move forward, keeping an eye on those important levels. And now we know the market is trading sideways, or it looks like it's trading sideways, and we're going to look for a little bit more clues here, a few more clues from some faster time frames. Here's a 5-minute chart. Now, this is one of the only time-based charts that I'm using here, and it illustrates, well, I call this my VIP chart. This VIP chart, the goal of the VIP chart is to find, well, the very important price levels. I'm going to find the trading ranges, right? I'm going to find the trading ranges, such as the previous high of day and previous low of day, and I'm going to analyze the overnight range, right? This is important. The overnight trading range, really important because it's going to give you clues as far as what's happening the rest of the day today. I can see 3 big clues right now on this chart. Let's go over them. First clue, look at that narrow range, right? Narrow range. Now, that may not seem that narrow to you. Compare it to yesterday's range. Yesterday's range, we got over $1 move in yesterday's overnight trading range. Guys, I'm telling you right now, those big ranges overnight usually always mean big ranges in the U.S. morning session. A narrow range overnight tends to give us a little bit of a concern. Now, as long as we know the range is narrow, we can play this game. We can buy the lows and take profit at the highs. We can sell the highs and take profit at the lows. There's nothing wrong with a narrow range as long as I'm aware of it. All right? I can't be looking to trade big trending moves if I'm in a range-bound market. Now, is this range-bound market, is this thing set in stone? Is this just the way it's going to be today? So there's no chance, Joe, we're going to get a big range day? Of course there is. We got inventories at 10:30. It's a summertime day. And if you remember what happened yesterday, right? Yesterday, this move that happened lower was low volume. It happened in a matter of what felt like a matter of minutes. And it was all because of this inconsistent volume. And sure enough, while the big money was on their private mega yachts, all the rookies and retail traders and speculators were pushing price around yesterday late in the day, right? That's of course, what can happen again today. So narrow range this morning, first of all, tells me to expect a narrow range, at least for the first part of the morning session. We don't have any major news until 10:30, so I will expect this range to continue unless something external comes in and pushes us around. We talked yesterday in our live trade room about how value is created, how the perception of value can change. Right now, the perception of value is right around 105.25. But if we heard a news announcement that there was an interruption in supply of crude oil coming from Canada or from South America or wherever it's trying to go, if there were concerns over supply, right, that would of course mean more in relative speaking demand, right, all of a sudden the value of crude goes higher because of the perceived lack of supply. So we know that right now the perceived value is at 105.25, but boy, you know very, very easily. Political news, natural disasters, economic news. I'll tell you, if we hear something funky on the news radio this morning, right, on the news feed, price could easily see value go higher. So we'll be ready for it. Second clue. The second clue that I see this morning is the location of price compared to the previous highs and previous lows. The previous low of day is at 104.86. The previous high of day, 107.27. In fact, we can see 107.69 overhead as another previous high, and I've got multi-day previous highs at 108.79 and a previous week's high at 108.82. What is this clue telling me? Well, first of all, we call this an inside trading day, right? We call this an inside trading day. If you were looking at this on a candlestick chart, on a daily candle, today we would be inside yesterday's, right? Inside yesterday's daily candle. So think of it that way, right? We know that we are looking at support at the lows, resistance at the highs of the range, and we know that if we break out of that range, we know that we have something going here now, right? Now we got something going. So second clue that I see is inside day. Previous high of day, 107.27, 104.86. Inside the range, I'm two-sided. Above the previous high of day, I'm bullish. Below the previous low of day, I'm bearish. Big clue. Whenever I find myself inside the range from yesterday, I know the market personality is in balance. I know that buyers and sellers are in agreement on the value of price. I also know that if I wake up this morning and price is below the previous low of day, I know that for whatever reason, and I don't care why, I just care what, when, and where, right? I don't care why it pushed prices lower. All I know is that this is clear proof. If we get below that previous low of day, the sellers and buyers have agreed that value is lower. Same thing is true at the previous high of day. We go up above the previous high of day, buyers and sellers agree the value is moving higher. So I will be bullish. Inside yesterday's range, I'm two-sided. I don't care what direction I trade in. I'm going to try to find a trend. If we can break out above the London trading range, I will try to find that trend up to the previous high of day at 107.27. That's for sure. So I'll be using the London trading range coming out of London. Below the previous low of day, I'm bearish. Above London's highs, I'm bullish. I do have a trend line resistance here overhead. And of course, a great runner target up at 107.27. Don't forget, members, we're always looking for that inside-out trade setup around the previous high of day and previous low of day. All right, looking good. A lot of information. Range-bound market personality. But as you can see, we've got plenty of room to go higher or lower today. We really do have plenty of room. You look back at the anchor chart and look at all the open space. If we break out to the downside, we've got plenty of room to head down to 104 even. We break to the upside, we got plenty of room to head up that trend line. Plenty of room up above to 107.27. So this looks like we're going to have to be a little bit patient at first, but boy, we've got some great opportunity here today once this engine starts firing on all cylinders. No pun intended, of course. The 610 tick chart, one last time frame here, and we'll toss over to Marty. The 610 tick chart, a very easy to see sideways range. We got very narrow cloud, right? There's no cloud. There's no green or red cloud here. We can see double tops, double bottoms. We're not seeing anything else here besides sideways ranges right tucked in the middle of this range. As we said earlier, as long as I know this is a range, I can buy the lows. I can sell the highs. I also know with all that wide open space, if we keep going through the highs, I'm now going to be buying pullbacks, wave pattern long. We go through those lows, I'm selling retracements, right? Wave pattern short. I also know to be very careful for that little fake out breakout, right, where it comes right back in. How many times do we see that where price breaks out and whoop, goes right back in? So keep an eye. Oftentimes we see price will come down first, stall, go back in, right? Sometimes it'll blow right through it and never look back. Depending on what we see is how we'll trade it. I would love to buy the lows and sell the highs of this range. I'd also love to get long here today, right, having it jump up back to that previous high of day. We'll see what happens today. Right now, almost impossible to tell what direction will be going in next. If I had to guess, I would guess to the short side this morning, just because of what we've seen the past few days. But as of right now, can't exactly tell what exact direction we're going to be headed for. We'll wait and see. All right, guys. Now that you know what I'm seeing on my charts today, relatively easy plan of attack today, right? Not that difficult. Now, I'm always curious, though. I'm always curious to see what my good friend Marty's going to be seeing today. And Marty, How are you today, buddy? Good to see you here today. Happy Wednesday to you, my friend. And let's get those numbers up there for tomorrow's or for today's inventory numbers.
Right. You see the API numbers, and then we have the forecast for today's numbers. You see that, right?
Yep, absolutely.
Good too. You can hear me? Perfect.
Absolutely, loud and clear.
All righty. Good morning, ladies and gentlemen. Well, so what we have is obviously the story of the night, right? API numbers come out, and you can see that we were released negative 3.7 million for the crude. Cushing had a draw of about 2.2 million. We saw a gasoline show a draw of just less than $1 million. What was that? 971,000. Heating oil, only one that shows the build, 1.5 million. Not really a big deal overall. It's decent that we saw a build of 1.5 million in the distillates, because you got to realize that we're not really heating many homes with heating oil. We're just making diesel fuel. So that was a very healthy number in regard to looking at the oil. So very healthy number, and I think that we could possibly catch a nice little bit off that market, off that news. Look over at the forecast for tomorrow's numbers, right? I mean, for today's numbers, the forecasts right in front of you. You can see crude, we're looking for 1.2 million draw. We're looking for a draw on the RBOB, 763,000. And then the heating oil, we're looking for a draw of about 50,000. The refinery utilization rate, this is interesting. We're looking for negative 70, well, really negative 0.7% to negative 1% on the refinery utilization rate. So interesting here in terms of just the number. Now, listen, if this number comes out just like the APIs, I think the market will rally. I think we'll see, another test up into the 108s. Then again, I just was telling my friends yesterday, I was talking to them, and I said, listen, this market might take off at 8 o'clock in the morning. Watch what happens when we hang up this call from 8 to 9. We might get a nice move to the upside due to these API numbers, right? We were getting a nice bid after 4:30 once we got these numbers yesterday. So now when everybody gets back to the desk today, I'm sure we'll see a decent bid, possibly. So keep your eyes out for a bid from 8 to 9 o'clock before the opening bell. So overall, just really kind of look at all of our suspects this morning. Enough of the inventory numbers here. Again, I'm thinking we could get a little bullish here. I'm looking to try to buy above the high at the 105.77. Again, above the 105.80s maybe. We can get something going to the upside, get something cooking here into the opening bell, into really the open, I would think. All right, so RBOB here this morning trades kind of sideways, heating oil kind of sideways. Brent has been catching a little bit of a bid in the Brent, right? Also taking a look at your Brent WTI spread. Brent WTI spread has been interesting this morning. I would say it's kind of sideways, maybe leaning to a little bullish mentality, but I haven't seen it on the last minute or two. But I was looking at it earlier, and I really think that we were very bullish on the Brent WTI spread, and I think that can feed more to the market. But right now, I don't have a last prints here on the Brent WTI spread. Looking at the calendar spreads this morning, they're kind of a little mixed in terms of activity as well. We've been sideways. We had a very thin, 70-cent range during the night, so really nothing huge in terms of activity here happening in the overnight session, even after getting those API numbers, right? So we'll keep an eye on this. Let's continue on, and let's kind of take a look at our dollar, of course, with Chase. Dollar right now giving us that risk-on sentiment with the crude. Yeah, look at the direction of the dollar and look at the direction of the crude, right? Risk-on sentiment. Let's take a quick look before we look at our levels, just really quickly at our crack spreads. Got out our crack spreads and our swap spreads. This is something that was really moving crude a lot yesterday, and you got to look at the relation between the crack spreads, swap spreads, and the outright crude. There has been an enormous amount of liquidity into these crack spreads the last few days, and it's been really noticeable in the crude, and it's been pushing crude around a little bit, so I just kind of want to point that out, right? Courtesy of a couple friends here that gave me that info. All right, I guess we talk about levels. Got them right in front of me here. Crude pit session high from yesterday. Right, I got yesterday's pit session high 106.83. Low 104.86. Closing settlement number 105.30. Net change on the day yesterday, we were down about $1.53. Overall, about a $2 range. Today, your daily pivot 105.66. Once again, your daily pivot 105.66. with some resistance up above at 106.83, 107.63, and 109.60. Support down below, I got 104.86, 103.69, and 101.72. Implied volatility currently stands 22%, right? 22% in the implied vol, front vol index, just about 28.80 as well. So almost 23% in the OVX, but 22% in implied vol. In the options pit, there has been a lot of activity to the upside. There's at least, 2-to-1 type of put-to-call ratio for upside and downside. So that's very noticeable, and that's very big when I see that kind of stuff. So there's more activity in the call as opposed to puts, 2-to-1. So that's something that kind of perks my ears up every time I see that. So more call side activity to come, I guess, here a couple days, even in the short-term weekly dailies. Okay. Guess let's go to natural gas now. Natty gas pit session high from yesterday, 334.70. The low, 331 even. Closing settlement number 331.80. Right near its low prints here. You can see we settled the day near the lows, down about just 21 ticks. And we had it about a 40-tick trading range, so it was really nothing special in terms of that. Today, daily pivot, 325, 332.5. 332.5 on the daily pivot. I got resistance up above at 331 even, 333.62, 339.90. Then we have support down below at 330.30, 328.80, and 325.10. So again, those are your levels here of support, resistance above and below here with volatility about, what's that, 30%, 33% on volatility. Open interest, 330,225. And we have been watching now, again, just a little bit of increase into those 330 calls. But I'm not going to be a buyer quite yet. I want to see if we can test those 325s first and then look to buy possibly, as I don't want to jump the gun on this here with this natural gas here. So we'll be keeping an eye on the natural gas. Watch the open interest, guys. Again, we've been kind of really adjusting around open interest. We've been putting some money into the contract lately, the October contract, when I say OC, by the way. And that's really about it. Let's see, how are we looking on time? 8:01. All right, I'm going to throw it back over to JJ right now, as we are talking about getting onto the trading floor this morning. I'm going to throw it back over to JJ.
Thank you, Marty. Appreciate it. Good to have you out there braving the elements this morning. Hey, you know what? I got a question for you. We got one of our guests here this morning. Gary, thank you for that question. It's a great question. Marty, could you clarify for us, when you say risk on, risk off, what exactly are you referring to, and how can a new trader use that information when you come in talking about risk on, risk off?
Sure thing. So risk on, risk off sentiment. Risk on, risk off is basically the way you're going to be using the dollar in your trade, the way the other markets are going to be correlating with the crude. So when I say risk on, risk off, you're just going to look at the dollar, right? So for instance, higher dollar, lower crude, right? For instance, that's the trend. That's what we see. It's what's well defined. For instance, then that's when we're going to start using the dollar as an inverted correlation to the crude, 1. 2, you also want to realize, okay, is it going to be, we're going to be front-running equity markets. We're going to be correlating with equity markets. You see that in the risk on, risk off sentiment too. So remember, the dollar, crude's traded in dollars. So we want to be able to define the dollar index's trend, and then we use the inverted correlation for that. If it's a risk-off sentiment, that means the dollar and crude are trading in the same exact way, and they're both going higher. Like yesterday, crude and dollar both traded lower. That's risk-off, and it's really kind of not, the correlations are broken, if you will. So it kind of leaves us traders dumbfounded in a way when we see low volume and all our correlations are off, and we can't get a good handle on the market. It's a little frustrating for some traders. So that's what I mean when I say risk on, risk off sentiment. And
absolutely.
Between markets.
Great clarification on that. And Gary, in my point of view, Gary, when I hear somebody say risk on, I always imagine traders going into the market and putting their money to work. When somebody says risk on, risk off, to me, and again, this is where I think this is a great example of how Marty and I will see differently sometimes. It's a great way to look at this, having two different opinions. Marty clearly has a different vision on that as I do, and I would definitely encourage you guys get with Marty and his partner Jeffrey during the day for their broadcast, because you're going to learn so much about the lingo and the terminology they use. When I hear the word risk on, I think about that local going into the pit, right, and putting his risk on the table, right? And usually that means wider ranges, right, more volume and more volatility. So that's from my point of view, and hopefully that makes some sense to you there, Gary. Ken, thank you so much as well. Thanks for being here, guys. And as always, Marty, thank you. Thank you to the whole team over there at Traders Audio for being great every day here with us. Thank you guys for coming out and seeing us here today. And as always, don't forget to come back and see us tomorrow morning, 7:30 a.m. Eastern Time, Monday through Friday. Don't forget, send us your feedback. JJ at School of Trade. I'm Marty. Well, sometimes I'm Marty. Call me JJ, though. I'll answer much better than that. I'm JJ at School of Trade. That was Marty at Traders Audio. Go check him out at tradersaudio.com or go see me at schooloftrade.com. Thank you guys so much for being here every morning at 7:30 a.m. We'll leave you guys here for the rest of your day. Don't forget about that narrow trading range. We haven't changed much since we last spoke about it. Still at 105.25. And it looks like patience is going to be the name of the game here this morning. We'll see if Marty was right. Let's see if we're going to get some reaction here from 8 to 9 o'clock. And I'm looking for that 10:30 news event coming out for crude oil inventories. Don't forget to learn this stuff so you can earn with this stuff. We offer a free trial over at School of Trade. Come out and see me sometime, and we'll catch you guys here. Same time, same place. We'll see you tomorrow. 23 hours and 30-minute break starts now. We'll see you guys for a Thursday edition. Tomorrow we get jobless claims to get us started, and we'll see you then. Adios, amigos. Bye-bye for now.